We're all navigating this world just flooded with information, right? Always looking for those little shortcuts, those aha moments to make sense of it all.
Absolutely. Turning that big pile of sources into something clear.
Exactly. And today we're doing a deep dive into something that might sound a bit niche at first, but honestly, it holds some really universal lessons about tackling complexity.
That's right. We're going to unpack the fascinating world of auditing in specialized industries.
Yeah, what does it actually take for auditors to, ensure things are accurate when they're dealing with sectors like airlines or farming or banking?
It's definitely more intricate than you might first think. There are some surprising challenges hidden away there.
So our source today is this really insightful article, and it details the specific things auditors need to keep top of mind, particularly when they're in the planning phase. And our mission really is to pull out the key nuggets. We want to help you understand not just what makes these industries different, but critically why those differences matter and how auditors actually, navigate them.
Okay, so first off, it's probably important we clarify what we even mean by a specialized industry.
Good point.
Because it isn't necessarily about being rare or unusual. That's kind of a common misconception, I think.
Yeah, I think that's maybe the first aha moment for a lot of people listening.
Yeah.
When we say specialized, we're not talking about some tiny, obscure business.
No, not at all.
We're talking about sectors that are, frankly, huge and often part of our everyday lives. Things like airlines, banking, insurance, agriculture, oil extraction.
Exactly. Massive parts of the global economy.
So what is the defining factor then, if it's not rarity?
Well, it really boils down to complexity and how standard rules might not quite cut it. It's like trying to use a regular map in a maze. You need something more specific. So these industries either have very specific financial reporting standards that apply directly only to them, or alternatively, they've developed quite distinct accounting policies. Policies based on the normal standards, but applied in a unique way to handle their specialized transactions and balances.
Right. So either a whole new rule book just for them or a very specific interpretation of the existing rules because their situation is so unique. Can you give us some examples of those, like industry-specific rule books?
Sure. A classic one is IAS 41 agriculture. This standard forces auditors to grapple with things like, biological transformations, animals growing, crops harvesting, and market swings in a way you just wouldn't see auditing, say, a tech company.
Auditing life itself almost.
Pretty much. It brings unique challenges compared to just auditing like static machines. Or think about IFRS 7 financial instruments. Disclosure. It has incredibly complex applications, especially in banking.
That makes sense. And then you mentioned the other type where normal standards get applied in a special way. How does that work?
Yeah, good question. Think about valuing extracted oil. It actually follows IAS 2 inventories, which is the standard for, inventory.
Right. Basic inventory rules.
But applying it to, black liquid gold being pulled from deep underground, that application is very distinct for the oil and gas industry.
I see. Same rule, wildly different context.
Exactly. Or another example, apple trees. They're called bearer plants. They get valued under IAS 16, which is property, plant, and equipment.
So like a factory machine.
Kind of, but you're applying a standard for buildings and machinery to a living thing that grows and produces fruit for years. The core idea of PPE is there, but applying it to an apple tree is pretty specialized to agriculture.
Okay, that clarifies it perfectly.
Yeah.
So you figured out an industry is specialized. What are the big audit considerations then? Where do auditors start when faced with these unique financial landscapes?
Well, the absolute first hurdle, the first checkpoint, is competence. Do we, the auditors, actually have the right skills for this specific job? Before even thinking about accepting an audit in one of these specialized industries, the firm has to really look hard at the auditing standards.
So it's not just about wanting the business. You have to genuinely ask, can we do this properly?
Precisely. And if you don't have that competence, what's the risk? Is it just a small error? Or something bigger?
Yeah. What are the stakes?
Oh, it can be much more serious. There's the IESBA Code of Ethics. That's the International Ethics Standards Board for Accountants. And it requires that the auditor has a proper understanding of the client's business, its complexity, and knows the relevant industry regulations and reporting rules.
So it's an ethical baseline. Don't dive into waters you can't handle.
Exactly. It's like the ethical compass. Without that competence, you risk missing material misstatements, or even worse, failing to spot major issues like fraud or, problems with the company staying afloat.
And it's baked into quality management too, right?
Yeah.
Not just ethics.
Yes, absolutely. ISA 220 revise. That's the standard on quality management for an audit. It basically acts like the firm's internal checklist for ensuring a quality job.
Okay.
And it specifically requires assessing if the firm has sufficient and appropriate resources, and crucially, the appropriate competence and capabilities for the engagement.
Now, does firm size play a big role here? Do the big firms automatically have an advantage?
It often helps, certainly. Larger firms might already have clients in that sector, or they have easier access to in-house experts or maybe a more structured training program.
So it sounds like being big is key. What about smaller firms? Can they even play in these specialized areas? Or are they kind of locked out?
That's a really common thought, but no, not necessarily. A smaller firm can absolutely build deep expertise and specialize in a particular niche. Think about a smaller firm that focuses only on, say, farming clients or nonprofits. They might develop incredible competence in that specific area through years of dedicated work.
So it's about focus, not just scale.
Exactly. It's about demonstrating that focused expertise. But regardless of size, the key is documentation.
Showing your work.
Precisely. Firms need to document carefully how they considered competence and what steps they took to bolster it, like specific staff training or bringing in external help.
Got it. Okay, so step one is competence, making sure you can do the job. Then what? How do you actually plan the audit for something so unique? Let's take Oceanic Shipping Co. Again, how do you chart that course?
Right, good example. Well, interestingly, the basic approach to identifying the risk of material misstatement, it's actually the same as any other audit.
Really?
Yeah, fundamentally, you start by understanding the business and its environment. What changes is the kind of risks you're specifically looking for and how you prepare your audit team to spot those unique risks.
Okay, so the framework is the same, but the details are different. And that's where the specialized nature really kicks in during planning.
It is. Audit firms will often provide extra support for their teams on these jobs. Things like briefing notes or internal technical guides explaining how certain accounting standards apply specifically in that sector.
So for our Oceanic Shipping Code, the firm might give the team specific guidance on valuing a fleet of ships under IFRS, or maybe how to handle the accounting for major maintenance periods like dry docking.
Exactly, that kind of thing. It's crucial support for the team members actually doing the work.
Now, I can imagine it being easy to get totally absorbed in the really specific stuff like, the valuation methods for different types of cargo ships or the rules around charter agreements, and maybe forget that Oceanic Shipping Co. still has regular office buildings, pays salaries, maybe has some goodwill from an acquisition.
You've absolutely nailed a critical point there. It's a real trap.
Is it?
Yes. Sometimes the biggest complexity isn't just the unique stuff, it's remembering the normal stuff too. Auditors must not forget to consider the standard balances and transactions just because they're working in a specialized industry.
So for a bank, even with all the complex financial instruments, you still have to audit their property depreciation, their provisions, maybe goodwill impairment.
Absolutely. Those normal risks are still highly relevant. You can't get so laser-focused on the industry-specific details that you miss fundamental accounting issues elsewhere in the business. You need that holistic view.
That's a great reminder. Look at the whole picture, not just the shiny specialized parts. Okay, so you've got your competent team, you've planned the audit covering both the unique and the mundane. But what happens when the auditors themselves hit a wall? When they just don't have the specific expertise needed for one part of it? When do they bring in an expert?
Yeah, that happens quite often, actually. Relying on experts is very common in these specialized industries.
Okay.
Auditors frequently plan right from the start to use an auditor's expert to help gather evidence, simply because the audit firm itself might not possess every single type of niche expertise internally.
Like bringing in specialist valuers for complex derivatives in a bank or actuaries for pension schemes.
Exactly those kinds of scenarios. These are highly specialized fields, often well outside the core skill set of a typical financial auditor.
So you brought in the expert, they do their analysis, give you the numbers.
Yeah.
And then as the auditor, you just take their word for it, right? I mean, they're the expert.
Oh, well, that's where you have to be really careful. It's not quite that simple.
Yeah.
The whole process is governed by another standard, ISA 620, which is all about using the work of an auditor's expert. It's not just a casual thing. It's quite rigorous.
Okay, so what does ISA 620 involve?
It covers things like evaluating the expert's objectivity. Are they independent? Their competence? Are they actually qualified? Their capabilities? Do they have the resources? It also covers defining the scope of their work very clearly and then, crucially, assessing their findings.
Assessing their findings. So you can't just rubber stamp what the expert tells you.
Absolutely not. You can't outsource your responsibility. Even when using an expert, the ultimate responsibility for the audit opinion rests squarely with the auditor.
That makes sense. The auditor signs the report.
Precisely. So it's particularly important that the auditor evaluates the relevance and adequacy of what the expert found. Just because the industry is specialized doesn't mean the auditor can just delegate everything.
So how do you do that? How do you assess an expert's work if it's outside your own expertise?
You have to consider if the expert's findings make sense in the context of everything else you know about the client. Do they align with other audit procedures? Are there any inconsistencies you need to investigate?
Right. So for oceanic shipping coma, if a marine valuation expert says a ship is worth X amount,
the auditor still needs to understand how they reached that value. What assumptions did they use? Does it seem reasonable compared to, say, recent sales of similar vessels or the ship's condition? You have to apply professional skepticism even to an expert's work.
That's a really key takeaway. Okay, bring this all together then. What does this focus on specialized industries mean for everyone listening? Whether you're in finance or run a business or you're just curious.
Well, I think this whole discussion highlights a really universal truth, actually.
Which?
When you're faced with something that seems unusual or highly specialized, the key is often to go back to your foundational knowledge and figure out how to apply it to that specific situation.
So it's not about memorizing a million niche rules for every possible industry.
Not at all. It's about understanding the core principles deeply and knowing how they adapt. For instance, the basic rules for valuing inventory cost, net realizable value, that kind of thing.
Yeah.
Those apply whether you're talking about chemicals in a warehouse or cows on a farm or oil sitting in a storage tank. The core concept of valuation doesn't change.
But how you get the evidence to support that valuation might look completely different.
Exactly. You might need to test the oil's purity or physically count the cows or check the condition of the chemicals. The how changes, but what the valuation principle remains.
And it encourages critical thinking too, doesn't it?
Yeah.
Don't get bogged down by the super specific details.
Right. Focus on how those core concepts like valuation or existence or completeness apply differently in these unique contexts.
Like asking for our shipping company. Do these massive ships they claim to own actually exist? Are they seaworthy and floating, or are they rusting away in dry dock, needing major repairs?
Precisely. The underlying audit assertion existence is the same, but the scenario makes testing it uniquely challenging and interesting.
And for the auditors themselves, is this kind of work seen as a burden or?
Oh, generally, I think working on these specialized engagements can be incredibly rewarding.
Yeah.
Yeah, it gives you exposure to really diverse, sometimes quite unusual businesses. It definitely keeps the work fresh and intellectually stimulating. You're always learning. It's certainly never a dull day.
Okay, so wrapping things up.
Yeah.
Auditing a client in a specialized industry. Yes, it definitely brings unique challenges.
For sure.
But it doesn't have to be overwhelmingly complex or, scary. If you carefully consider competence before you start, make sure the team has the right support and guidance.
And use experts wisely relying on their skills, but maintaining that critical oversight.
Then these audits are entirely manageable.
Absolutely. And, this whole journey into specialized auditing, it kind of reveals something bigger, I think.
What's that?
That the real power of knowledge isn't just memorizing facts. It's about being able to apply fundamental principles to any new complex situation you encounter.
That's a great point. It really makes you wonder, doesn't it? Where in your own life or your own work could you apply your core understanding to unlock insights in areas that seem specialized or maybe even a bit intimidating at first?
Something to think about.